Hello everyone, welcome to Student Fund Manager. I am Sardar and in this video I am going to talk about our weekly fund returns. So let's have a look at it. So in our weekly overview, we are going to talk about our fund overview at first. Then we are going to talk about the trades that we have taken this week, then the decisions and why we have made them. And lastly, we are going to have a market review, which is how the markets moved during this week. So during this week, we have experienced returns of negative 1187.94, and this is a no-brainer since the market is falling, and we have experienced a loss of 2.17%. And our current asset under management is 52,443.28 rupees. And if you can see over here, this is how the benchmark has performed, and this is how our fund has performed during this period. So you can see that the percentage growth in our fund, which can be translated as volatility, is higher than that of Nifty. And next we can see that a withdrawal of rupees 1968.9 rupees has been made, and this is a withdrawal from one of the mutual fund holdings. And the reason was to decrease our holding in that fund and change the allocation. And coming to our current asset allocation, we can see that 49% of our assets are in stocks, 19% in bonds, 1% in futures and options, 8% in mutual funds, and we have 23% of cash holdings. So coming to our trades, we can see that I have purchased one more Adani Green stock on 14th March, and we have bought one of these stocks for 700 rupees and 15 paise, and total we have three of these stocks as of now. And we purchased five Adani Ports and Sales Limited stocks on 14th of March at rupees 658.7, and on 16th of March we have sold them for 679 rupees, and total we have gained a profit of 101.5 rupees, which is approximately 3.08% of the trade. And next we have purchased 5 ITC stocks on 16th March at rupees 381.1 for each share. And also on 17th March we have sold all our holdings of just 5 stocks of NCC Limited at a price of 104.85 rupees, and we had previously discussed that we are going to sell these stocks for 105 rupees, and this is close to that range, so we have sold all of our stocks which we had bought for rupees 91.45, I think. And on the sale we have realized profit of 14.65% or 67 rupees. Not that great volume wise. So coming to our decisions, on 14th March we faced a dilemma of whether we should sell the SBI option to buy ITC stocks, or whether we should hold the SBI option expecting the price of the contract to rise, since currently we are facing a huge mark to market loss on the option. And my decision was to hold the option instead of buying the ITC stocks. And this is because currently SBI is at a very volatile stage, and even though the value of the contract is very less right now, but still there is a decent chance to sell this option at a higher price, considering SBI share has hit a rebound point, and I am looking the prices to drive the contract price up by at least a few more points. And again on 16th March we faced another dilemma, which is whether we should sell Adani Ports to buy ITC. Our decision was to either hold Adani Ports, which we had bought on 14th March, or whether to sell Adani Ports and buy ITC. And we all know that I have sold my Adani Ports stocks to book the profits and buy ITC. Now the reasons that were there for me to hold Adani Ports is during normal market times, this stock has provided us a very good market growth rate, and apart from that, the price was close to the long-term moving average, and this was an attractive position to buy or hold this stock. And as an alternative, we could instead sell these stocks to book our profits and buy into ITC. Now I consider ITC to be a safer investment, and since the price does not show any sign of correction anytime soon, I was looking to buy this stock. And also if the market is correcting, then the chances of retaining our capital or any gain with ITC is much higher than most of the other stocks out there. So for this reason, we decided to pull our money from Adani Ports and reinvest them in ITC. And coming to the market recap, we can see that Nifty remained in the expected range that we had set for this week. So even though it had broken 17,000 point, but thankfully it did not hit 16,800 point. And from this range, it seems to be recovering for now. And on the 15 minutes chart, the price is above the 2-day average. So I don't know how significant this is, but for me, this looks good for now. So this was all for our weekly review, and I will be researching on the market trends more, and I will be publishing the video for next week, and we will be determining next week's range as well as our strategy for the week. So that was it for today. Thank you so much for watching, and I will see you in my next video. Take care. Bye bye.